and get a little wind beneath its wings, like our next guest has. It's Mr. Oliver Slope. He's with Blue Line Futures in Chicago, Illinois. Thanks for being on. Happy Monday to you, sir. What's top of mind?
Well, I certainly wish it was a little bit happier of a Monday, seeing a lot of red on the screen, particularly in corn and soybeans. And it's just kind of, wild what difference a few days makes in these markets nowadays. Last Wednesday, Thursday, it looked like we were going to finally chew through some technical resistance levels for corn and soybeans and potentially stage a little bit more of a relief rally. But we ultimately failed and sold off pretty hard on Friday, which is, again, spilling over into pressure to start the week and really kind of leaves the door open for some of these psychologically significant numbers to be tested. $4 for December corn and $10 for November beans. Now, corn still mostly range bound, though. Remember, the bottom end of the recent range is 403, psychologically significant support $4. So I still think that can hold. Exports have still been pretty decent for the corn market, so I think there is value at the lower end of the range. On the other hand, soybeans not as optimistic or rosy of a picture. We did see some flash sales here over the last couple of weeks, but we need to see that on a more consistent basis and a much larger scale as well to kind of keep this market from really rolling over below $10.
I mean, I think the best way that I can sum it up, Oliver, is that if the funds aren't buying, nobody else is.
That's exactly it. And I've been talking with guys here over the last probably several months now, is if we do get these rallies, it's not going to be, new buying coming into the market. It's going to be short covering, and they're probably going to be short-lived little blips. So I think you're going to want to look at those opportunities as a means to get some protection onto the downside. There's still some year left. And still a lot of decisions to be made. So it'll be interesting to see how it shakes out. But again, I think that relief rallies are probably meant to be looked at as opportunities to scale in on some hedges.
How much do you think moved over the last little blip we just had?
Probably not enough. To be honest with you, it'll be interesting to see. The markets go up, the markets go down. Right now, the path of least resistance has been to the downside. Eventually, that will change, but I don't know what the catalyst would be to really shift that dynamic at this point.
Yeah, I mean, you're right. It's gonna be interesting to see, and I don't know. It's one of those things. Damned if you do, damned if you don't. Now, a lot of the producers in a tight bind because. Do they buy some puts here, spend some more money on a situation that's going to be bad, or do you wait around, keep your hands in your pocket, open for a rally? I mean, it's going to be a tough one. All right. Thanks for all that great stuff, Oliver Slope, Blue Line Futures. We're going to go away. Stay right there. We're going to come back. We're going to pay some bills, talk more with Oliver right up since it's 67.97. All right, let's bring him in. That's Oliver Slope, Blue Line Futures in Chicago. Oliver, anything jump out of you there?
We had a nice close to last week's trade in the cattle markets. We had October live cattle futures really trading to their highest levels since last year, which is great. And, we talked about rallies and the grains being as opportunities to look for protection of the downside. I think the exact same can be said for the cattle markets, just at a little bit better prices, relatively speaking. We've seen the convergence between August futures and the cash market, which is pretty on par with what we seasonally see. My concern going forward is once we get August futures into first notice day and delivery here in about a week, that we start to see that some of that optimism wane as we chew through the peak demand season. And historically looking, if you look back over the last 5, 10, 15, 25, 30 years, August is a really tough month to see these cattle market have a really sustainable rally. And I'm not sure this year is going to be any different. So looking at opportunities to protect the downside for hedgers and play the short side for speculators.
Yeah, and to your point, I mean, it was not too long ago, maybe the end of last year. I mean, they just pulled the rug out from underneath these guys, and it's a great example of just make sure you've got some insurance. And you know what? If it doesn't pay off, that's great. You're not always upset when your fire insurance on your house doesn't pay off either.
That's exactly right. And you think back to that rug pull last fall, they sold off for really no reason. Not a whole lot changed on the fundamental landscape. This year, I think there's probably some different catalysts that could do that.
Yeah, right. Great point, as usual. Thank you very much. That's Oliver Slope. He's with Blue Line Futures up in Chicago. We'll bring it back here to Nashville and hand it back over to Tammy.
I'm Oliver Slope, Vice President and co-founder of Blue Line Futures. Join me on my journey for this year's Pro Farmer Crop Tour, August 21st to the 24th. Now, I'll be on the eastern leg, which starts in Ohio, goes through Indiana, Illinois, into Iowa, and up to Minnesota. I'll be sending out my normal daily grain market commentary as well as special updates from the findings on my route throughout the day. Now, sign up for these updates by filling out the form on this page, and we'll send you one of the best looking koozies around. And I love corn koozie because who doesn't love corn? Thank you, and I look forward to you joining me on my journey.